This is one of those moments where a single piece of paper sitting in your mailbox can determine whether you get a refund this year or get hit with a surprise tax bill that ruins your spring. If you receive Social Security, SSDI, SSI, or survivor benefits, there is a specific document heading your way, or perhaps it is already sitting on your kitchen counter, that holds the key to your financial standing with the IRS for the 2025 tax season. Most retirees operate under a dangerous assumption. They believe that Social Security is simple. The check arrives, the money is spent, and taxes are something other people worry about. But that assumption is exactly how thousands of seniors end up in a panic every April. Every year, the Social Security Administration sends out tax forms that are frequently misunderstood, often ignored, and sometimes contain errors that go unnoticed until it is too late. But 2025 is not a normal year. We are dealing with significant cost of living adjustments, shifts in income brackets, and for many of you, retroactive payments that have quietly changed your tax liability without you realizing it. The gap between what you think you received and what the government reports to the IRS is where the trouble begins. And let me be clear, the IRS computers do not make mistakes in your favor. Welcome back to Tax Hack Pro. Today, we are not talking about rumors or stimulus hype. We are doing a deep dive into the official SSA tax forms that will define your 2025 tax return. We are going to break down exactly how to read them, how to catch errors before the IRS does, and the specific mathematical formula, the provisional income test, that determines if your benefits are tax-free or if the government is coming for a cut. Stay with me because understanding this process is the difference between a stress-free retirement and a letter from the IRS. Let's start with the immediate context. Why does the 2025 tax season require a higher level of vigilance than years past? It comes down to the math of inflation. Because of the cost of living adjustments, the COLA, your gross benefit amount, has increased. While that sounds like good news for your wallet, it can be a trap for your taxes. The thresholds that the IRS uses to decide if they should tax your Social Security have not been adjusted for inflation in decades. This means that as your benefit check gets bigger to keep up with the price of milk and gas, it is simultaneously pushing you closer to the tax line. A slightly larger check might be the seemingly harmless trigger that pushes you from paying zero taxes on your benefits to paying taxes on 50 or even 85% of them. This brings us to the document itself. You need to know exactly what you are looking for. For the vast majority of you watching this, you are looking for Form SS 1099. This is the Social Security Benefit Statement. If you are a U.S. citizen or a resident alien, and you received any retirement, disability, or survivor benefits in the previous year, this is your golden ticket. It details the total amount of benefits you received, any Medicare premiums that were deducted, and the net amount that actually hit your bank account. Now, if you are a non-resident alien receiving U.S. Social Security benefits, your form looks different. You will be receiving Form SSA 1042. The rules for that form are different regarding withholding, but the principle is the same. This is the official record. Here is a strategy for the proactive taxpayer. Do not sit around waiting for the Postal Service. The Social Security Administration allows you to access these forms digitally through your My Social Security account. I highly recommend logging in and downloading a copy the moment it becomes available. Why? Because if there is an error, and errors do happen, you want to find it in January, not the night before the filing deadline in April. Getting a head start gives you the time to fix problems without the pressure of a looming deadline. Now, let's move to the most critical part of this discussion, the calculation. How does the IRS actually decide if they get a piece of your check? It is not as simple as looking at your total income. They use a specific formula called combined income, sometimes referred to by accountants as provisional income. You need to understand this formula because it allows you to control your financial future. It is a three-part equation. Step 1, take your adjusted gross income. That is your wages, dividends, pensions, and taxable withdrawals from 401ks. Step 2, add in any non-taxable interest. This is the one that catches people. If you have municipal bonds that are usually tax-free, they get added back in for this specific calculation. Step 3, add exactly 50% of your annual Social Security benefits. When you add those three numbers together, you get your combined income. Now, you compare that number to the IRS thresholds, and this is where the tax torpedo hits. If you file as a single individual, and that combined number is between $25,000 and $34,000, up to 50% of your benefits can be taxed. If that number is over $34,000, up to 85% of your benefits can be taxed. If you are married filing jointly, the numbers are slightly higher, but not by much. Between $32,000 and $44,000, up to 50% is taxable. Over $44,000, up to 85% of your benefits are subject to federal income tax. Notice that I said up to. It is a sliding scale, but the key takeaway is that these thresholds are fixed. They do not go up with inflation. So every year that you get a COLA increase, you are marching closer to these numbers. That is why reviewing your form is not just paperwork, it is financial defense. Let's talk about the specific pitfalls that ruin tax returns. The biggest one is the lump sum nightmare. Sometimes the Social Security Administration falls behind. They might owe you back pay for a disability claim or a recalculation of benefits from 2 years ago. Suddenly, you get a check for $20,000 in 1 year that covers 3 years of benefits. If you simply enter that total number from box 3 of your SSA 1099 onto your tax return, it will look like you made a massive amount of money in one single year. This can skyrocket your combined income and force you to pay taxes on 85% of your benefits, potentially pushing you into a much higher tax bracket for all your other income too. However, the tax code has a solution for this if you know where to look. It is called the lump sum election method. This allows you to treat the retroactive parts of that payment as if they were received in the previous years they were meant for. You don't have to amend your old tax returns. There is a special worksheet in the IRS instructions that handles the math. It effectively spreads the income back out, keeping your current year income lower and potentially saving you thousands in taxes. But the IRS will not do this for you automatically. You have to know to apply it. This is why reading the description of amount in box 3 section of your form is mandatory. Now, what happens if you open that envelope, look at box 3, and realize the number is wrong? Maybe they say they paid you $30,000, but your bank statements show you only received $25,000. This is a critical moment. Do not file your tax return using the wrong number just to get it over with. If you file a return that mismatches the document the SSA sent to the IRS, you are virtually guaranteeing an automated audit notice. The IRS computers simply match number A to number B. If they don't match, you lose. Instead, you must fix the source. You cannot fix this by calling the IRS. They cannot change the form. You must contact the Social Security Administration directly. You will need to provide proof of the error, bank statements, benefit letters, and deposit records. Ask for a corrected form. This process takes time. It might take weeks or even months. If the tax deadline is approaching and you still don't have the corrected form, file an extension. It is far better to file an extension and pay an estimate of what you owe than to file an incorrect return that entangles you in the bureaucracy for years. To bring this all together, I want to give you a Tax Hack Pro checklist for this season. This is your game plan. First, log in to your online account and download your form as soon as it is available. Do not wait for the mail. Second, verify box 3 benefits paid and box 5 net benefits against your actual bank deposits. Do the math yourself. Third, look specifically for any notes about lump sum payments in the description box. If you see them, alert your tax preparer or pull up the lump sum election worksheet immediately. Fourth, run a rough calculation of your combined income before you start filing. Know in advance if you're crossing those $25,000 or $34,000 thresholds so you aren't shocked by the result. Social Security does not exist in a vacuum. It interacts with your pension, your IRA withdrawals, and your savings interest. A small change on this one form can ripple through your entire tax return. Too many retirees walk blindly into tax season assuming that because nothing went wrong last year, nothing will go wrong this year. But in the world of taxes, complacency is expensive. This channel, Tax Hack Pro, exists to help you stay informed, prepared, and protected. We dig into the details so you don't have to panic. We replace confusion with clarity. If you found this breakdown helpful, if it saved you even a moment of stress, make sure you hit that subscribe button. Join our community of proactive taxpayers who are keeping more of their hard-earned money. Check out the other videos on the channel for more strategies on maximizing your retirement income and minimizing your tax burden. Remember, staying ahead is always easier and cheaper than catching up. I'll see you in the next video.